cryptocurrency regulations around the world. Welcome back to CryptoFlix YouTube channel, where we explore the exciting world of cryptocurrency and finance. In today's video, we'll dive into a crucial topic that impacts the crypto space, cryptocurrency regulations around the world. Cryptocurrencies have gained immense popularity globally, but as the industry evolves, so does the need for regulatory frameworks. Let's explore how governments around the world are approaching this transformative technology. Before we delve into specific countries, let's start with a brief overview of cryptocurrency regulations. The regulatory landscape varies greatly from one jurisdiction to another, ranging from strict regulations to more progressive approaches. In general, regulators focus on areas such as consumer protection, anti-money laundering, AML, and know your customer, KYC, compliance, taxation, security, and investor safeguards. However, the specific requirements and attitudes towards cryptocurrencies differ significantly.
Now, the world's biggest securities watchdog has proposed the first global set of standards for regulating crypto assets. IOSCO's members include most of the world's market regulators, including the SEC in the US. His recommendations follow a series of scandals in the crypto industry and the collapse of the exchange FTX, whose millions of clients are believed to have collectively lost billions of dollars. IOSCO's recommendations urge regulators around the world to cooperate to control companies with operations across borders. Well, I'm pleased to say we can speak to Martin Maloney, who is Secretary General of IOSCO. I'd just like to begin with the problem that the proposals are aiming to solve. So, what is wrong with the way that cryptocurrencies are or are not regulated at the moment, and crypto assets in general?
Are or not is the question, I think. If you look at the last 10 years, there's been a significant sources of indecision on many people's parts. Some people saying, this is a new technology, leave it alone and maybe it'll do great things. And on the other side of the spectrum, you had people saying, this is a mechanism for criminal activity, do not give it the respectability of regulating it, leave it alone. They have both tended to leave it alone, and only certain jurisdictions who sought some sort of advantage have tended to move on and regulate it. The problem is there's huge gaps in this regulation, and it's not really responding to the type of model we're dealing with, which is highly complex, integrated businesses with huge conflicts of interest in them, directed directly at retail clients on a cross-border basis. It's a formula for problems, and huge numbers of people have lost large amounts of money. And really, we're saying this needs to stop, and we need similar standards all across the globe.
Yes, from what you're saying, that the case is here that it's people who aren't necessarily the most savvy that are getting involved in the crypto market, and I suppose they need protecting. What is it that has initiated the move now? Because as you've talked about, there's been a reluctance to accept crypto assets as a legitimate thing to be regulated.
Yeah, we actually started down this path at March last year because we just felt there was an accumulation of issues really dating right back to the ICO craze back in 2017 and 2018, which over a number of years had led to such losses across the globe. And then we saw sort of well-intentioned efforts to develop regulation in different places, which we thought wasn't adequate, and that's what sent us down in this direction. But then after we started, you see huge events like the FTX event, which really disclosed to everyone the potential for abuse here and for really badly run business models to emerge, and that's what's driving this.
Yeah, you mentioned FTX there. Do you think that's something that could have been avoided?
You know, in a well-regulated environment, you shouldn't get outcomes like that. And it is quite notable that the part of the FTX business that was actually domesticated in the United States and overseen by US regulators did not suffer from the kind of problems that FTX itself faced. So yes, in principle, you should be able to avoid that kind of experience, but only on the basis of very significant changes in the way businesses are run. The kind of conflicts of interest we saw in the FTX model, they just shouldn't exist anywhere.
IOSCO talks about the need for a global approach to this, but given that regulation is done on a country-by-country level, does that not just mean that the system is fixed up to fail?
Well, it's a huge challenge, there's no doubt. And there's two sides to fixing it. On the one hand, our core work as global standard setters is to set a baseline and then ask every country to look at how they do regulation and to build up a bit of pressure on them to get their regulation into a good, defensible model. The second aspect of the solution is actually cooperation among supervisors. After you've got your regulatory frameworks in place and you've got people like crypto exchanges trading on a cross-border basis, the regulators have got to cooperate and talk to each other about what it is they're seeing and take action to make sure that people are protected on a cross-border basis. And in our proposals, we've laid out both sides of that and how it can be done.
So how can it be done?
So in terms of the actual standards, the way to do it is to not get diverted by the different legal frameworks in different countries. Is it a security? Is it not a security? Just look at the outcomes. Look at what's actually been achieved for investors in terms of 5 or 6 key parameters that we've laid out. If crypto is actually being used as an investment product by investors rather than just as a gambling product, then those investors have got a right to markets which are well supervised. They've got a right to custody arrangements where they always know where their money is, how much they've got, what's going to happen if the exchange goes bankrupt, and so on. And we've laid out all those details of how those standards should operate. And then it's up to countries to test what they've done. And frankly, I suspect many countries will draw the conclusion that what they have done is not adequate to the standards we set out, and there is more to do. And on the other hand, we are urging countries, and we will work carefully with countries to set up supervisory colleges and other arrangements for cooperation between supervisors, so that if you find yourself faced with an exchange which says, well, I don't live anywhere, I don't belong anywhere, I don't have authorization anywhere, that you take action to actually bring them to heel, in a sense, and make them disclose their business models to regulators and develop a proper relationship with a supervisor who's there to protect the retail investor.
You talk about regulators needing to share ideas. Is anywhere getting it right already?
I would think in terms of cooperating in relation to the supervision of crypto, I'd have to say I haven't come across an arrangement I'd say is really strong between countries. But it's quite notable, for example, that we have seen among our members in Asian countries where there's a very significant interest in crypto, a strong push by those regulators to actually increase their cooperation among themselves. And that's a very positive development. We already run a system for global exchange of information in relation to enforcement cases. And that's a pretty good model to build on. We'd like to see more people doing that kind of thing and extending it into other areas of supervision, not just enforcement. Do it even before you get to the point of enforcement.
Just lastly then, how confident are you that IOSCO's proposals will be taken up?
Well, our record is that our proposals are usually taken up by everybody. It can take a little bit of time because changing legal systems takes years. So, but you've got to start somewhere. So I'm pretty confident we will get there. I'm also pretty sure it will take us some time, a period of perhaps years of engagement with jurisdictions to actually talk through with them what they've achieved, what they haven't achieved, and how to get up to the right level. So we will get there. But it's a hard struggle because, as you say, it's a globally fragmented market with lots of jurisdictions doing things their own way.
New cryptocurrency licensing rules in Hong Kong take effect today. The new regime, which bolsters protection for retail investors, comes amid tighter scrutiny on major crypto exchanges following the FTX crash. Deborah Wong reports.
Virtual assets trading platforms wishing to operate in Hong Kong must now ensure safe custody of assets, avoid conflicts of interest, and comply with cybersecurity standards, among a raft of measures. Exchanges must also assess and set up exposure limits for retail investors, and only allow trading in highly liquid tokens. But crypto trading is currently banned in the mainland, so operators must not accept retail traders from China. Now, it's a curious dynamic given that China has backed Hong Kong's push to become a virtual assets hub, despite cracking down on crypto trading back in 2021. So the question is, should investors be worried about policy U-turns?
It has a different regulatory regime that is well respected by international investors. Capital flows in and out of Hong Kong are completely free. International investors who want to purchase mainland Chinese stocks listed in Hong Kong can do that without restrictions. The central government has been using Hong Kong to pilot a number of schemes in financial services, and I don't think that there is anything for investors to worry.
Hong Kong Monetary Authority Chief Eddie Yeh said the city wants to give the industry flexibility to develop, innovate and create an ecosystem. But that doesn't mean a light touch regulation. In fact, Professor Aries believes the new rules allow Hong Kong to fill a void left behind by a series of meltdowns in the West.
Now at the point of lowest confidence is when you can instill more confidence to investors by showing them that it is safe to trade these assets in Hong Kong because they are well regulated. So definitely there is room for Hong Kong to step in and become an international hub in the trading of virtual assets.
Chen Zuling, who runs a Singapore-based blockchain firm, is also eyeing a slice of the pie, such as potentially offering staking services in the city as its crypto space grows. Staking is a way for crypto holders to earn rewards on digital assets.
I think Hong Kong is never short of, sophisticated funds and investors. So that's going to have a great inflow into the crypto space. After the crackdown of Signature Bank and Silvergate, there's not efficient on-ramp, off-ramp services globally, right? I think that's where after it's licensed out, the banks are more comfortable to serving that need.
More than 80 companies have already expressed interest to operate in the city ahead of the new regime. Now that's including OKX and Huobi, two major crypto exchanges. Professor Aries believes these movements signal a growth trajectory, one that the city is prepared to meet as it steps up recruitment of fintech professionals.
Let's begin with the United States, one of the major players in the crypto space. The U.S. has a complex regulatory environment with multiple agencies involved in overseeing cryptocurrencies. The Securities and Exchange Commission, SEC, plays a vital role in determining whether a cryptocurrency qualifies as a security, while the Commodity Futures Trading Commission, CFTC, regulates digital assets as commodities. Additionally, the Internal Revenue Service, IRS, provides guidelines on crypto taxation. Moving on to the European Union, we find a diverse set of regulations due to the Union's decentralized nature. However, there are overarching guidelines that member states follow. The EU aims to create a harmonized approach to cryptocurrency regulations. The Fifth Anti-Money Laundering Directive, AMLD5, requires crypto businesses to comply with AML and KYC regulations. The European Securities and Markets Authority, ESMA, also provides guidelines for securities tokens. Now, let's turn our attention to China, a country that has taken a unique stance on cryptocurrencies. In recent years, the Chinese government has implemented strict measures to regulate the industry. China banned initial coin offerings, ICOs, and imposed restrictions on cryptocurrency exchanges. However, the government has also shown interest in blockchain technology and is exploring the development of a central bank digital currency, CBDC. Next, we have Japan, which has emerged as one of the most crypto-friendly countries, implementing regulations to foster innovation while ensuring investor protection. Highlight key points about Japanese regulations. Japan was the first country to legalize Bitcoin as a legal payment method. The Financial Services Agency, FSA, oversees the crypto industry, issuing licenses to exchanges and setting regulatory standards to prevent fraud and money laundering. Lastly, let's discuss India, a country with a rapidly growing interest in cryptocurrencies. The regulatory environment in India has undergone significant changes in recent years. The Reserve Bank of India, RBI, initially imposed restrictions on banks dealing with cryptocurrencies, but the Supreme Court of India overturned this ban in 2020, providing a positive boost to the crypto industry. The government is now considering the introduction of a regulatory framework to oversee the sector and protect investors. As we've seen, cryptocurrency regulations vary greatly from country to country, reflecting different approaches and priorities. Some nations are embracing cryptocurrencies, while others are taking a more cautious stance. In the United States, we have multiple regulatory agencies involved, with the SEC and CFTC playing pivotal roles. The European Union is working towards harmonized regulations, focusing on AML and KYC compliance. China has implemented strict measures, while Japan has created a conducive environment for crypto innovation. India is moving towards establishing a regulatory framework after lifting its ban. It's important to keep in mind that the regulatory landscape is constantly evolving as governments adapt to the fast-paced crypto industry. Stay updated on the latest developments in your country and understand the regulations that apply to you. Thank you for joining us today as we explored cryptocurrency regulations around the world. Remember, knowledge of regulations can help you navigate the crypto space wisely and securely. If you found this video informative, don't forget to give it a thumbs up and subscribe to our channel for more insightful content. Let us know in the comments which country's regulations surprised you the most or any other topics you'd like us to cover in future videos. Until next time, happy investing and stay curious.